Welcome back to the U.S. Bank Lounge at Money 2020 in Las Vegas. This is the next in our series we're calling The Future of Finance. Today, it is all about innovation at scale, how fintechs and banks are transforming the customer experience. With us, we have Ryan Caldwell. He's the founder and CEO of MX, which is a financial intelligence operation founded in 2010. Congratulations on that. Dominic Venturo, Chief Digital Officer at U.S. Bank. 27 and a half years with the company, so 5 years in this role. And then at the far end, Jordan Wright, CEO and co-founder of Atomic. Also, congratulations on coming up, I guess, in a few years, your 10-year anniversary.
Thank you.
Of that. I want to start this dialogue, jump in where you feel like you want to, but Dominic, we're going to start with you. What are the important components of a best-in-class digital experience for consumers in today's financial environment?
I mean, when you think about what best-in-class actually means, it's how the customer perceives it. So at the end of the day, our customers on the consumer side or small business side are experiencing state-of-the-art digital experiences across a host of platforms, not just in banking. So the way we think about the reference point, it is the last amazing experience that the customer had. That's the bar that keeps getting reset. That means it needs to be seamless. It needs to be smart. It needs to be instant. And we need to get out of the way and let them do their banking so that they can get back to what they want to do, which is running their business or running their personal lives.
And when we were prepping for this last week, we talked about how you all are B2B. Your customers are a U.S. bank, and at least for you, I guess it's over 190 entities that you're working with. That's 190 people you have to make sure are having that great experience.
Yeah, and I think it's true for both MX and us. I won't speak for you too much here, but we both serve the consumer. We both feel a need to make the consumer, give them the best experience possible, but they aren't our direct customer, which puts us in an interesting position. But when I think about this question in light of that, we have to be chasing both what consumers are demanding, and we have to stay in lockstep with our partners because they're doing customer surveys, we're doing consumer surveys, we're trying to figure that out together, and then we have to knit together a solution. Atomic works with 9 of the top 10 banks. We have to knit together a solution that works with all of them, ideally, to be able to launch in market, as well as many of the other financial solutions, fintechs in the United States. And so I think, we have a lot of, one of the frameworks that I use for this is there have been a lot of consumer tech companies that have come to market. Like, you talk about like a Rocket is an interesting one, right? So this was a company that Truebill that was acquired by Rocket that now does subscription management. So that was a direct-to-consumer product. Here we are about 5 to 7 years later, and we see that entering a lot of financial institutions. We'll be launching that product in the next little while. And so we keep track of what direct-to-consumer products become immensely successful. There's usually a 3 to 7 year lag before those enter financial institutions generally, and we keep a close eye on that to be able to understand what's coming next in consumer.
I take it from your perspective, Ryan, that pretty much tracks. Is it very aligned, or what's the different angle?
Where Jordan and I resonate very, very strongly, and where we're able to best serve someone like a U.S. bank, is understanding that our job is to make them, a financial institution, a fintech, any entity we serve, look like a hero to that consumer. And we can't do that if we're not constantly thinking about what does that consumer need. And so we are obsessed with thinking about what they're anticipating, the experiences that they want to have, and they have to be near magical, very delightful. If they're not experiencing our products in a way that felt like that was kind of too good to be true, how was it that simple? How was it that smooth? Then we're failing. And so Atomic and MX, companies like us, are constantly pushing the limit on how much we can anticipate what they need to do, pre-fill out fields. And I think that's where an Atomic and an MX work so well together is Atomic is magic at what they do, right? And then we stitch together a lot of the other parts of the experience that when you blend them together makes that U.S. bank consumer have that delightful experience.
So if you could, let's just carry on there and build that out a little bit. Give me something granular of an example of that fintech, that fintech bank collaboration where the customer actually did have, it does trickle down to the customer of, wow, that was amazing. So what would that look like?
So a great example is consumers want to be known. Their lives are so complex. They're dealing with so much that is stressing them in their normal day-to-day lives that for their bank not to know about them and not to anticipate their needs and be able to auto-fill things out. So an example would be, let's say that someone would love to switch their direct deposit to U.S. Bank. They've wanted to become a U.S. Bank customer. They've started the process, but every single time it just has too much friction. So someone like Atomic makes that being able to be automatic. where they can actually, you do a few swipes, fill a few things out, and it's digital and you don't have to go into a branch and fill out a bunch of paperwork and do those forms. MX aggregates data in that enables us to really understand, oh, we already know who their employer is. We already have this information. We don't have to have them select out of a drop-down list. They can actually pre-fill that in. So we keep reducing that friction and making it feel just absolutely fluid, dynamic, automatic.
Yeah, if I may add to that, I think going back to the original question too of how do you help create great consumer experiences for the future? It also, who you hire matters. And this is an area that I will very candidly say I took a page from Ryan's book on, right? Ryan's senior leadership team all cares about the consumer. Jane Barrett on Ryan's senior leadership team builds libraries of teaching material for consumers on how to manage their finances, right? His entire leadership team, from what I know of them, cares about the consumer first and foremost. And I think when you hire a team that has that in mind, that where it's a mission-driven company that wants to make the world a better place for them, you're able to work through and with clients like a U.S. bank to be able to provide an experience that is magical, because everybody here, I've been involved in almost every conversation that was material to this, what we do together. Everybody was talking about the consumer the whole time and how we make them give them the best experience possible. So I think that's critical.
And Dominic, let me dovetail on that because of talent, what it's like to manage.
Yeah, totally. And I think this is an important part of the conversation, because you think about the technology enables us to do certain things. But when you are customer obsessed, when you are helping the customer or the client achieve their results, it requires not only the technology, but it requires an amazing experience design. You have to look at those journeys from end to end, and then we have to think about what are the steps, what are the processes that happen, what can we automate to try to make that process easier, more seamless? Where can we get data that are available, like in the case of MX, understand your employer so that when it comes time to choose your direct deposit, you don't have to go searching for it. When you think about direct deposit switching, it's not a matter of implementing the technology to do that. It's a matter of redesigning each experience. So when you're opening the account on the front end and you're brand new, that experience is unique. When you didn't add direct deposit and you're following up or having the ability to push a notification to the customer that says, you haven't set direct deposit up, let us help you, and then name the employer and allow them to go to that next step. So inform action or insights to action. All of that is powered by technology and good data, but it's all designed by companies that have the customer's interest in mind. And that customer obsession is what helps us deliver just these truly delightful experiences.
Can I ask you, I want to dovetail a little bit about the measurement for that. Like, what's critical mass to be able to say the customer experience is not, they're not getting the customer experience we're looking for. We've got to adjust fire. How are you measuring that? And how are you measuring your time to respond when you do see changes need to be made?
Yeah. I think, at a very high level, we understand what's happening within the experience stack. So we know how a flow is supposed to happen. And if something happens that isn't supposed to happen, we know it. We get an alert. We can go look at it. That would be like a technical gap, right? The other thing, we look at the customer journey success. So they opened an account. Was that successful? Did they add direct deposit? If we see that they haven't been adding it, then we study that journey to find out, is it too complex? Did we present an alphabetical list of employers that isn't searchable? Did we not present the employer that we believe that they have? That type of thing. When customers are looking at their transaction history and then they turn around and call our call center, that may mean that we didn't provide enough rich data in the transaction history to help them understand what happened on my account. Where was that transaction? What merchant did it happen with? What's the logo of that merchant look like? When we enrich that data with partners like MX, then we reduce the need to call, because they see it and they go, oh, I remember I did that at that merchant at that time. So we're enriching data, we're enriching experiences, we're relentlessly studying it. We're also surveying, so we ask the customers for the feedback to tell us how we're doing. But you can't always just wait and ask. because if something gets broken, they don't always tell you. So we also actually have to look at the telemetry and all the live data to see how the flows are happening. And when you do all of that extraordinarily well, if something goes wrong, you fix it quickly. If something needs redesigned, you put that into a sprint and you get it done. And we do that through agile delivery. And all of that is how the magic happens.
I think Brian, go ahead.
Well, I was going to say, so one thing, I mean, that nails it, right? But one thing that's so different, and I know that Dominic and Jordan would agree with me, is that it's no longer just about we see a hit, like we see it not working as well as it should. We're actually finding that when you implement Atomic, you hit new numbers of deposit switching that were never seen before.
I was going to make the same point.
And then when you mix Atomic with MX and you pre-populate these fields, you don't get a 15 or 20% lift, you get a several hundred to a several 1,000% lift. And so these things are hitting new, like the levels of success that we used to shoot for, we're blowing past those. And that's where I think someone like US Bank, it takes a brave bank to realize the whole world's changing so rapidly. We can't wait until a new standard is set and then try to chase it. We have to be part of defining that new standard.
Yeah, I would agree. And the other point I was going to make along these lines, Ryan, is that I want the best experience for the consumer, but we also need to align for success for the financial institution. And so in this case, when you're talking about what we're doing is not only unlocking a the great unlock for the consumer now leads to better success for the financial institution too, because deposits are increasing on new accounts, all this sort of stuff that lead to better net interest margin as an excellent flow to the rest of the bank, right? And checking account deposits are excellent deposits in terms of net interest margin, right? And so I think all these sorts of things, if we can make them work if we can pull solutions together like this that are a win for the consumer and then a win for the financial institution, that's where the magic happens.
I mean, if you think about the end-to-end experience, and then we'll talk about the business results. So whether it's I'm brand new to US Bank, I've never been here before, we have solutions and partnerships that let us understand about you so that we can ask you fewer bits of information to fill into the form. The more fields on a form that you have to fill in, the lower your likelihood is that you're going to complete that task. Now you've got the account open and you're approved. Direct deposit switching and the ability to do that needs to be seamless and easy. Then we help guide you through the digital experience and set up things like bill pay and other activities so that you have an assistant in the digital world that's actually guiding you to get those things up and running. It's not unlike very successful consumer products firms like in the electronics industry where you buy the product and then you get the hands-on help to get it working. We do that through technology or through the humans, the bankers in the branches, aided by technology to be able to get them up and running. Why? What we have found is that when customers come to us, the first experience is a test. It is a test on, do I want to do business with this company?
Yeah, it's a stress
do I
test,
want to
right?
keep doing business with this company? And really importantly, am I open to opening other products and services? So if that experience is here, high bar, then we have the ability to earn the right to have a conversation about the next product, the product expansion, the account aggregation, the information yielding. We now know more about the customers. That then leads to set up a goal. Tell us what you're saving for. Let us help you achieve your goals and dreams. Tools, insights, action across those journeys and then across the life with the customer, help make that a richer experience.
Now, we can flip that around a little bit to be this relationship when you're thinking about it in terms of, all right, we've got new technologies, a couple founders here. We've got maybe more traditional, you got more traditional platform, and you're trying to upgrade that. For the two of you, what's the challenge? What's the pitfall? What gets stuck in your craw when you're looking at some opportunities that maybe take a little bit longer to get to that solution than you would like?
Well, I think that's where a great bank as a partner makes all the difference in the world, because there are banks that are thinking exactly what I just said. Let's let the new bar get set and then we'll take 2 or 3 or 4 years to catch up. And then you have this growing percentage, but a smaller percentage of banks like US Bank that are leaning in and saying, no, we're going to be part of setting that new standard. What I love about that is, you're talking about that first experience matters so much to the consumer, Dominic. Like, for me, that's a moment to basically tell a consumer, I respect you. I respect your time. I respect the brain damage of going through any process. And we pre-thought this and we try to make it amazing. And we just want you to come into our house and experience everything that we've built to make your life great. If a bank doesn't set that as the tone on the onset, it sets a tone of disrespect. I already have that field, but I'm going to make you type it in again. I already have this thing. I'm going to make you do all these steps. We've all done this. Think about in the years past, mortgages are the worst example of it.
Yes.
You have to re-sign so many forms and refill out so many things. And it shows a huge sign of disrespect to the consumer. That's changing. And banks are realizing that fintechs have removed all this friction. And if they don't become fintech-like, we're in these magical experiences, it's not going to be delightful. I'll give one other example that I think was very powerful for me. I won't list which bank it was, but I was calling in trying to figure out how to get a wire complete to a bank.
You were demonstrating your own brain damage.
Yes. So I'm calling in and I'm trying to get this wire done, and it was confusing online how to get it done. I wasn't sure if I had to go into a branch. This is like 10 years ago. And as I'm calling in, or so I'm trying to get it done online a few different times, and then when I call in, instead of making me go through a menu, from the moment I called in, it recognized that it was my cell phone I was calling from. It recognized that I had been online searching on how to do a wire, and it immediately said, "We see that you were looking for a wire, Mr. Caldwell. Would you like to be transferred directly to someone who can help you with that?" That made me love that experience. It felt magical. It felt delightful. We have to create more and more experiences like that.
Yeah, I couldn't agree more that we need more experiences like that. But to your question around like what are some of the issues that we face? I think about the traditional crossing the chasm, Jeffrey, whatever's more crossing the chasm. The issue that we face is that we'll go set a standard with one or two, right? But then you have so much time until the other ones. I had to fundraise enough money so I could be around long enough to be able to see my products come to market. Even though we had a first product in market making a lot of money in year one, it took 6 years, right, for us to be able to get these large financial institutions on this product. And so I would say that's another issue that founders face when working with large financial institutions on innovative big projects is you might get one anchor client that's going to go do something with you. But to Ryan's point, it's then going to take you gotta go sign up everybody else too. And I'm grateful for the ones that are out there in front. But then you're just like, man, but if it takes me 3 years or 4 years, I have to have enough money. I have to be around long enough to be able to see the fruits of that. That's a tough issue that I face as a founder.
Yeah, I mean, I think a couple of things when you think about this. One of them is a long sales cycle. The other then is so now I'm talking about fintechs doing business with banks. And I'll just use US Bank as an example, right? You have a sales cycle. Are we interested? Then you want to do it. Then you have vendor review. You have information security review. You have technical review and implementation. So part of what we need to do as a bank that embraces partnering with others to make our products better is we have to actually make those processes better too. It's not just redesigning the experience for the consumer customer or the small business customer. It's creating a fintech group within our innovation shop that is dedicated to working with the fintechs. They understand them. They understand their unique position in the world, and they understand how to shepherd them and guide them through those processes. Then you have to have the technology stack that's actually compatible with modern businesses. If we were working with old technology stacks, we could have a short sales cycle and a quick vendor review, but then the technical implementation could be 18 months to 2 years. We can't do that. We have to have modern APIs. We have to have a modern developer capability. We have to be able to exchange data in a real-time way and do that securely. And we've built all of that, which enables us to be able to plug in new partners and new capabilities when we find a way to make the experience better. And that has to happen on the other side of the coin in terms of the partnerships and the way that you manage those, or you just can't be successful in this space.
Go ahead, Wright.
You can't overemphasize that. I mean, being able to be technically ready, we have seen so many banks that we've gone into and they have this exact problem where there is this 90% tax on not having the right infrastructure. And sometimes you have to even educate not the entire executive committee, but even the board to say, if you don't pay the price of getting your technology stack in the right position, every innovation you do is going to have a 90% tax on it minimum. And US Bank is a very strong position, having paid, it sounds like a good amount of that tax.
Yeah, but also I will say, the way that US Bank has gone about that innovation group that you just discussed, which we've done a fair amount of work with, and again, we've worked with a lot of large financial institutions, highly impressive how quickly the process was for evaluation. It didn't feel like we've been in evaluation phase for 2 years before with a financial institution, right? This was like a 60-day process and a 90-day go live process that we experienced with you. It was absolutely unbelievable. And so having the technical chops ready, but also streamlining that initial process. You guys have an incredible fintech practice that does a great job making sure that business unit is ready, that you have people lined up and ready to go, that resources are ready. It's the fastest anybody's ever implemented for us and gone live with the product. And it was absolutely amazing.
And there's something too about this, about trying to keep up with customer expectations. All right, be it a retail side or an individual, and keeping up with their expectations, and or being able to do the Steve Jobs thing and being able to come up with something that they didn't even know they wanted yet. All of that, the pressures of that, the partnerships that you need, the ability to respond, all of those types of things. I mean, I trust that's where the anticipation comes from, trying to keep anticipating so you can keep ahead of those more quickly evolving expectations of a consumer.
Well, I mean, for sure you have to do that. I think and we don't always get it right? Sometimes the new to the world experience is not well received at first, and we have to iterate it. So this is the other part of the delivery side. So when you think about, in our world, when we think about digital delivery, part of it is we understand what we're trying to do. We want to be agile at that. We want to innovate in experience. We do front end research, of course. We get feedback. We deliver. But then if we have to iterate it, you have to be able to put it back into the cycle and immediately improve upon that feedback. And those process loops are important. You have to design for it. So think about, you have to have the technology stack. You have to have modernized the technology stack. Then you have to modernize your digital experience. You know, in the industry, we call this digital transformation. But the way it looks is rapid product development, rapid delivery, quick reviews on processes and the way that you implement. And then we go to market together to be able to do that. That involves change management, training, communication at the speed of digital. And the speed of digital is pretty darn fast. So all of that has to be operationalized to be able to do that exceptionally well. It is a good example of many years of investment, but also thinking from the beginning about what we wanted to get to. What did that North Star look like? That North Star was digitally enabled experiences that either are do it yourself, enable the customer to do it themselves, do it together. So things like co-browse and other experiences that we do to enable the banker to assist the customer in real time. Yeah. Or digitally enabled tools that enable the bankers to do it for the customer using the same platforms and investments that we've used for the customer to make account opening, account changes, lost and stolen card replacements, and all of those things incredibly seamless across the stack. That requires first a vision, then a strategy, and then a very focused enterprise on the art of digital delivery to get that done.
I heard something last night that I have rarely heard from a financial institution, and it surprised me. And they were saying to me, I asked them about a particular vendor they had gone with, an experience they had launched and sounded like they were excited about. And I said, I'm really interested in that move. It was an agentic move, and it was really early, I thought. And they said, that was just an experiment for us. We're just trying to learn the market. And I was so impressed. That's very rare for a financial institution to say. Yeah, literally, we're shutting that down. It was just an experiment for us. And I think that learning, that's something that financial institutions have really struggled with, that speed of iteration cycle and the willingness to be wrong on something and say, gosh, I'm going to be wrong, but I'm going to try.
Is that a key to good collaboration between fintechs like yours and these more mature banking situations like that? Is the idea is, like you said before, it's the risk factor. It's like, go ahead and maybe you'll make a mistake here, but it's the idea of like getting out ahead, anticipating, and when you think about it and it works out, now you've got those rails ready to go.
Yes, but I would say the most important part is you have to be willing to fail for sure. But you take your failure rate to almost zero if you do tight iterations. And that's something that a lot of banks aren't used to. They're used to doing this waterfall methodology where they're like, no, we're going to have committees after committees and we're going to plan and remove every bit of risk out of this thing. And we're going to know exactly what it's going to look like when we're done, versus make a first cut and see how much it succeeds and then decide, now we know our next step is this much more clear. So they're doing this kind of like little steps walking towards this beautiful outcome instead of trying to pre-plan the entire outcome. But the biggest thing is you've got to get moving. You got to take that first step. And so I think that's the key. So the risk is there. The bank has to be willing to fail. And I love that you mentioned that, but you don't have to fail. You can reduce your risk by making tighter iterations.
Agreed. The other element in reducing the risk is for many of our changes, we have the ability to implement the change for a small subset of the customers.
Yeah.
So we have a whole list of sort of known unknowns, right? We have things that there's no way to really understand them until we start running water through the pipes. But we don't want to expose the entire customer base to that experiment. So we may spin up a new solution and make it available to maybe 10% of the customers. And we monitor it, we iterate it, we improve it before we begin to go throttle it or expand it to the remainder of the customers. So it's not that we're avoiding the risk, but we're mitigating the size of the impact if we got it really wrong. And then we have the ability to iterate it and then expand it to the audience more broadly. And what that enables us to do is through a cycle or two, it enables us to get it pretty perfect, pretty good from a customer experience perspective. And then we can go on to the next body of work, the next bit of research, the next iterative improvement. And we do those in parallel. So the teams that are doing the work on the future projects are not exactly the same ones that are delivering against the experiments. And that allows us to rapidly do the improvements because you've got 2 time horizons happening at the same time.
So when it comes to fintechs partnering with larger banks, then what's important to that? What's important to that those small fintechs need to know when engaging with a larger bank to make a good relationship start? Is there that due diligence on the front end? Is it a couple hard questions on the front end to be able to set expectations?
Yeah, in our experience, I tell everybody that we work with, life is long. I plan on working in this industry till I die. I don't want to retire ever. So I think that's a critical part in all of our relationships is when you're working with somebody. I mean, the number of people we have worked with that were at one financial institution and now they're at another one. And now we're having opportunities at this other one because they moved over there. So I think relationships are key in financial services and in working with these financial institutions. And I think making sure that I would naturally more lead on product and be like, hey, we have the best product for these 10 reasons, right? But your relationships matter. And especially when you're building a relationship as founders, some founders are in it to sell their company in 3 years and be done. And right. And that's not what I'm in this for. I'm in this for the impact we have on consumers. And I only achieve that as I continue to level up the number of people we have access to. And I have to be able to work with every single financial institution in the United States. And I need to want to work with every single fintech in the United States to be able to do that. So I think relationships can't be overstated, the importance of developing a real relationship with somebody and being there for the long run. And I think some key questions up front can certainly help with that. But I think it's also how you show up throughout the sales cycle, how you're there, especially once implemented, right? Like, we have plenty of financial institutions. We have some that we do less revenue with than we would expect, right? But continuing to give them that level of respect and knowing that there's an opportunity there in the long run, and we're playing the long game. I think the long game is probably the most underrated aspect of creating great relationships and being able to go work with the best financial institutions in the country.
All right. Yeah, I strongly agree with that. I think another component is this word vendor that I would imagine Jordan hates as much as I do. I will never be a vendor to a bank. I'll be a partner. Yeah. If a bank wants me as a vendor, you go buy from someone else, right? And so the reason why partnership is so important is it is this long-term investment in their success. You have to truly feel that I'm responsible for this bank implementing my product successfully and thriving. If I don't have a high degree of confidence that's going to be the case, then I don't want to engage on the onset because I'm setting all parties up for a failure. The interesting thing is that if you're looking at this long-term horizon of what success looks like, you have to have the respect of understanding that banking is this highly regulatory environment for a reason, right? And I know a lot of fintechs come in and don't respect that aspect of certain things in a bank have to move slow. But a good partner pushes where you can, but not in some naive, delusional way of regulation matters. It's there for a reason. It needs to be reined back from time to time for sure, but it serves a purpose. So how do we work with a bank, understanding the world that they live in? And we call it at MX the nobility in banking, having respect for the nobility of banking and serving that nobility versus speaking ill of regulatory constraints or the like. And I think that's where banks get frustrated with fintechs is they act often in some naive way of move fast and break things. And the bank is like, that's nice. My world can't quite exist fully that way. When a fintech comes in and understands how to do that, then they push the bank where it's healthy to be pushed. And we definitely push the bank for sure. And we like banks who are willing to be pushed, but we don't push them in a non-constructive way.
Yeah. And I think that, I mean, fintechs, you tell me, that's evolved a lot. I think the move fast and break things of 15 years ago, 10 years ago was probably a lot less now, just because of how are you going to be getting the money? Where are you investing? And being more cautious with it. So I think that probably aligns you all a little bit more with how banks operate as well. But I understand that whole point of pushing. Last question I want to get to gets back to the fact that we were naming names earlier, like talent that you've got in the room, the people you have in the room that make things happen. What's the role of AI moving forward in this piece of the business that really helps out with the consumer? That does, it's the human putting it into play, but it's the AI that carries it forward. Where might that be, Dominic?
Well, I mean, I think about it from a couple of different angles. So let's start with the customer experience, right? So you've heard me say insights to action. So using AI and other tools to help us really have relevant insights for the customer to tell them something that they either need to take action on or to help them when an action happens and we need to respond. So that's sort of one element of things. And that might be you're saving for a goal. And we know because you told us that you're saving for a goal, and in the month you have some excess cash because either an unusual deposit occurred or your spending was way down, one or the other. We can then insight, you have extra money in your checking account, action, let us help you move that money to your investment or savings accounts. And here's a quick button to do that. Change the amount, take it happen. Those kinds of things sound very simple, but at the individual customer level, they need massive amounts of data. They need to understand the context of what's happening, and then you need to present the insight. So that's sort of one. The other side of the AI in the experience is the smart assistant and the way that we help the customer interact with us, ask questions, go to tasks, and do things. For instance, asking the smart assistant, I think I need to turn my card off because I can't find it, takes you to the turn your card off until you find it, or let us know, or replace the card, or seeing a transaction that they don't understand allows us to surface an insight that says, I'd like to dispute this transaction, and then take them through the dispute and fraud claims pieces. So that's the customer side. On the development side, there's also real opportunities from an AI perspective. So we're beginning to use generative AI to help our product folks do the early discovery work, to help write the requirements. We call them stories, to help document what it is that they're trying to accomplish. And then, of course, on the engineering side, in things like code writing assistance, reviewing code for accuracy to make sure that we don't implement bugs. There are efficiency opportunities there. And we think about that in terms of being able to get to market more quickly. So time to delivery, how fast we can manage releases. And then we think about it in terms of the overall cost of delivery and the way that we do that. If we can improve efficiency, we have the opportunity. We have never had less demand than we have capacity. So we always have a body of work of things we want to do. If we can leverage AI to make us more efficient, we can then get more of what we want to do done for the customer.
Does that match up with your side, Jordan, of how you see it on the run up?
Yeah. So, I mean, what I would reframe it a little bit for myself. And I think about it as, I think AI is this interesting thing that banks are going to do a lot internally that I'm not going to have much to do with. But I look at agentic experiences that are going to enable consumers to get savings, to get more time back, get those sorts of things. Like if you think about the chargeback experience as an example, you see a payment transaction happen inside and you're looking through your transactions like, I don't recognize that, right? The number of people that might flag that because they don't recognize it is fairly high, right? But if Atomic can come in and provide an agentic experience where they say, hey, connect your Amazon account, we'll go check on it for you, and we'll bring back information to help you understand what this is, right? That's a neat experience for that consumer. Or across all of the places I shop, Shopify, Amazon, Walmart, I want to be able to have a single return button that will go and process my return digitally for me and just tell me, here's the physical thing you need to do to be able to finish this experience. So when I think about, there's like shopping, commerce, shopping, and then there's payments, that's agentic. And then there's going to be agentic experiences in banking. Some of these are going to be filling your taxes out for you on your behalf, right? Some of them, there are lots of opportunities to do agentic things in banking. That's the thing I'm most excited about. And those are the at-bat people that I'm most excited, like some of those agentic experiences acting on my behalf in the next 5 years, the most excited things I'm excited about.
Brian, close us out. Does that get you excited as well, or are there other pieces of it?
Yes, I agree with what was said. I think, both Dominic and Jordan would resonate with this as well. AI is going to affect so many things. It's too broad to cover them all. But the area that I'm most interested in is how does it actually bridge the digital to the human experience, and not just the human on the customer side, but the human on US Bank side that's actually trying to serve that consumer. How do we make sure the information is right in front of that person, all prepackaged, pre-analyzed, that human can now, it's like teeing up a ball and hitting the home run. That human can look like that absolute hero. But what's interesting, and to what Dominic said earlier, if you haven't already done all the work, which is very impressive that US Bank has done this, to be able to quickly implement an MX or an Atomic, then the lead time becomes very massive. It doesn't matter how much AI is advancing and how much people are excited about it. If you don't already have the 100%. Handles to move the direct deposit, if you don't already have the handles to get to the data and analyze the data and enhance that experience, then the AI doesn't have anything to do. I'll give you an example. Like, I'm driving in my car using Grok as an example, and I'm asking, hey, can you email me this conversation, or can you whatever? And it's like, oh, I don't have that capability. I don't have those. It doesn't matter how smart of a conversation I have with AI, how much it helped me, if it's confined inside this box without the connective tissue. And Atomic and MX are the precursor to AI being able to do what you want it to do anyway, but it is the prerequisite.
And I might just add something to that point, because I think it's such an important one. We'll have conversation where it's like, oh yeah, I'd love to pull in all of that data from Amazon, but the financial institution's like, I don't even have a way to exist, like have any data that exists outside of transaction data for a consumer, right? And so that technological infrastructure, it just has to be there. Otherwise you go, oh my gosh, this is amazing. And then that creates frustration internally at the financial institution when this person's like, I want to go chase this, but it'll take us 2 years of infrastructure work, or 10, to be able to get there, right?
To build out a core or an online banking system that can accommodate these extra fields.
Exactly.
Versus, oh, we have MX, just put the fields in, they go in automatically. We already have a slot for them. We're not 2 years out from this. We're 2 days out from these. And so these precursors are pretty important.
Which gets to that responsiveness as well. Ryan Caldwell of MX, thank you very much. Jordan Wright of Atomic, thank you very much.
Thank you.
And our host of sorts from US Bank, Chief Digital Officer Dominic Venturo. We appreciate you all being here and talking about the future of finance.
Thanks for having us.
All right, we're going to be back with more in this series here at Money 2020 in the US Bank Lounge. Come visit us again.